Well, it is a tier one asset. So it's the safest thing that you can do. And how many people talk to you about when the stock market is going down, that the spot gold market goes down too, right? And why is that? Because if you have borrowed to buy those stocks and they are going down, you're going to get a call from your stockbroker. We need you to deposit more money. So maybe you have to sell something off. And it's not whether or not this is what I want to sell. It's what will the market buy, right? So yes, again, it goes back to the fact that it's used globally in every single sector. It's the most liquid asset that there is because it runs no counterparty risk, right? And it has the broadest base of buyer. So yes, and I actually, I was able to use my gold really as collateral for a short-term loan. So sometimes that's hard to do, but banks would rather have this than, call them up and say, hey, I've got some shares in FTX. Let's see if they'll want to have that.
But why the central banks of the world are all buying gold?
That's actually pretty simple. And that is because they want to stay in power. Yes. So whoever owns the gold remains in power. Yeah. And, I think the advanced economies have gotten pretty cocky, right? You mentioned it earlier, Bank of Canada, they don't own any gold anymore. I would not want to be Canadian, and my son-in-law is Canadian, but I would not want to be a Canadian citizen because they have no protection. So it really is simple. It's whoever holds the gold, you're actually holding real wealth that's completely marketable. And you did see what's happening in Ghana, right? In Ghana. So, they're accumulating gold because nobody wants their currency. So what are you going to do as an individual when nobody wants the currency? You better have barterability and real wealth, because the other part of that are the opportunities that always present in crisis. But you have to be in the right place at the right time with the right asset. If you've got something that nobody wants, you have nothing. There are so many different ways that they can do this restriction as well. But once we are in full digital form, the central banks are talking about being able to tweak the money constantly. Oh yeah, I'm real comfortable with that one. Are you kidding me? And they want to remove all of the functions of money and take it down to two, which is just a tool of barter and a tool of measure. Forget any level of holding value, because they want to take us into a negative. Look, they've inflated all the purchasing power value of the currency away. They have to attack principal. That's what negative rates are about. And they keep talking about no limitations on how deeply. So now you get paid, and as soon as you deposit it into the bank, it's less than when you got your check or the deposit, because you won't get a check. It'll go directly in. You tell me why that's okay with me. I'm not even going to be able to get paid fairly for my labor, and I wasn't getting paid fairly to begin with because of inflation. Well, I'll say timing is the biggest challenge of any type of issue, okay? Because we can tell you what is most likely to happen, but exactly when it can be a little bit of a challenge, except I think your timing is probably pretty good, because we have those interest rate benchmark transitions that are supposed to take place by June 30th of 2023. And I think that there is probably going to be some kind of major crisis before that, because I don't think they can make the transition at all. And so they're going to have to cover up that blunder. And consequently, I do also think that central banks are going to come out and use the only tool at this point that they have, which is just to print that. But the confidence of the public which is the only thing that's holding this game together. I think the confidence of the public is really low right now, and that will be it. Once they do that and the public sees even more rapid inflation, that's going to be it. So I think your timing is probably pretty good, because they have to work off and get rid of these massive amounts of unpayable debt. And so they do that to create hyperinflation that would then repay that debt with currencies that no value, right?
Yeah.
It'll take a while to work through that debt. And then when you're talking about gold, history has proven over and over and over and over again that there has to be, once all confidence is lost, there has to be a component of gold that's put into the currency so that people start to trust it again and use it. So timing could be, we have a lot to burn off. I think your timing's probably pretty good.
Yeah. Well, I think it's pretty good, but it's still not, we don't have a long time in front of us to start to buy gold and silver. I mean, you start, the most important thing is you buy it as cheap as possible, and that is today, because it's going to rise.
Most importantly is to start. I believe once one starts, they keep adding to their position.
Absolutely.
Yeah.
I mean, I think the most important thing is to hold it and own it.
Yeah.
And do it as quickly as you can, because people always think that all these options will be available whenever they are ready, and that's just not the way it works. We get a big black swan event. I mean, look what happened in 2020, right? And people rushed into gold and silver, and a lot of the products that were available prior to that are still not available today.
Yep.
And the premiums were ginormous.
Yeah, exactly. I do remember that the Perth Mint were up to 16 weeks delivery on some items, and no delivery on certain items. And that's only. I think we may have had a slight increase in the amount of people that were buying silver and gold. So let alone everybody buying silver and gold to cover themselves. Next question. And before I do, I'm just going to read a couple of statements. One's from Egon von Grass, who we all very well know. But he said today, I read an article today, the US debt has gone up 35 times since 1981. But the tax revenue has only increased 8 times, from 0.6 trillion to 4.9 trillion. How can any sane person believe that with debt going up at 4 times faster than the tax revenue, that the debt can ever be repaid? I mean, what a statement. It's so obvious to the person who actually reads.